Welcome to the Deep Dive. Today we're tackling a huge one, a really high-stakes, high-velocity topic that just dominates the financial calendar. We're talking about how one single meeting, the Federal Open Market Committee, the FOMC announcement, sends these immediate and often pretty violent shockwaves through the crypto market.
Yeah, and our listener, well, they've given us this fantastic stack of sources, really detailed stuff, and covers expected outcomes, specific price targets, even 3 distinct scenarios for the big players: Bitcoin, Ethereum, Solana, Cardano, all looking at the lead up and the immediate aftermath of the announcements later this afternoon, October 29th, 2025. So our mission is clear. We need to distill all this high-pressure pre-event analysis, give you the full context, especially on those hidden variables the markets are actually watching.
Exactly. The market narrative, it always zooms in on the interest rate decision. But today, honestly, that feels more like the cover story. The real core focus, the thing that could unlock, well, hundreds of billions in capital movement, is that broader shift in central bank liquidity. Specifically, everyone is laser-focused on the trajectory and, critically, the potential end date of quantitative tightening, or QT.
Right, the QT.
And the volatility timer is ticking down to 2 key moments. First, 2 p.m. Eastern time, that's when the formal rate announcement drops. But then, maybe even more crucial, is 2:30 p.m. Eastern during Chair Powell's press conference. That's where the nuances will come out.
Okay, so to set the stage, give us a snapshot. Where are things sitting right now, literally moments before this news hits? What's the mood?
Well, as of about 1:57 p.m. CET, just a bit ago, the market is coiled up really tight. It's stuck in this consolidation phase. Prices are just bouncing around in these narrow ranges, It really reflects that intense pre-event tension. Our sources are pegging the overall crypto sentiment as, let's say, cautiously bullish, somewhere around 75, maybe 80%.
Cautiously bullish.
But yeah, that optimism, it's heavily tempered. Everyone knows volatility is pretty much guaranteed today. There's a huge volume of options expiring. Plus, you've got these lingering global macro risks hanging overhead, particularly around tariffs. So yeah, caution is definitely the word.
Okay, let's dive into section 1 then. Start with what everyone thinks they know. What's already baked into the cake, priced into the market before Powell even steps up to the mic.
Right, the certainty. Well, according to basically every piece of analysis we've seen, it's almost universal. The key expectation is a 25 basis point rate cut, a 25 BPS cut. That'll bring the target range for the federal funds rate down to 3.75% to 4.00%.
And when you say certain?
I mean, really certain. Tools like the CME FedWatch, they're showing this move has something like a 98 to 99% probability priced in. So look, if you're hunting for a surprise today, it's almost certainly not going to be in the rate cut itself. The market has fully discounted this action.
Okay, but why the cut now? It's not just guesswork, right? It's tied to how the economy's been doing.
Precisely, yeah. The economic rationale is the justification here for this dovish move. The Fed is clearly reacting to some weak signals we've gotten recently. Take the August non-farm payrolls report. It came in at only plus 22,000 jobs. I mean, that's a huge slowdown in hiring.
Wow. Yeah.
Meanwhile, you've got unemployment ticking up to 4.3%. And on the inflation front, core PCE, their preferred measure, is sitting at 2.9%. Still a bit above their target, sure, but it's showing enough cooling trend that they can justify this rate cut as, a preemptive step to support growth.
Got it. So to really frame the discussion we're about to have on these 3 scenarios, we need those starting points. Where were prices just a few minutes ago?
Absolutely crucial. Yeah, we need to measure the potential swings, the dips, and the rebounds from a very precise point in time. So verified prices as of 1:57 p.m. CET showed Bitcoin BTC was at $114,900. That's up about 5% on the week. Ethereum, ETH, trading at $4,110. Solana, SOL, looks strong at $201. That's an 8.2% weekly gain.
Nice week for SOL.
Yeah, and Cardano, EDA at $0.67, also up nicely, 7.5% on the week. Those are the levels. They're going to define everything that happens over the next, say, 72 hours.
Okay, that brings us perfectly to section 2, the real driver of the volatility today. As you said, it's not the 25 BPs cut everyone expects. It's the status of quantitative tightening QT. The Fed shrinking its massive, $6.6 trillion balance sheet. For listeners maybe less familiar, can you break down why the status of QT is so fundamentally important for risk assets like crypto right now?
Yeah, absolutely. It really boils down to one word: liquidity.
Yeah.
Or, put more simply, just the amount of cash sloshing around in the financial system. The current QT program means the Fed is actively pulling $95 billion out of the banking system every single month.
$95 billion a month? That's a lot.
It's a powerful systemic headwind, right? It's like constantly applying the brakes. Now, the crucial moment came earlier this month, October 14th. Chair Powell dropped a hint. He said QT might end In coming months. That phrase got everyone's attention.
And in coming months. Okay. And why is ending it so critical? Is there like a specific trigger they're watching?
Yes, they're watching the level of bank reserves. Powell basically said QT needs to stop when those reserves get close to about $3 trillion. That's to prevent, liquidity drying up too much, causing problems in the plumbing of the financial system. So ending that $95 billion monthly runoff is huge because it means the Fed stops actively draining all that capital. Analysts, the big banks like JP Morgan, Goldman Sachs, they're suggesting this halt, probably kicking in around November or December, translates into a positive cash flow shock, a big one. We're talking roughly $500 billion injected back into the system annually.
Wow. Okay. $500 billion. That sounds like pure rocket fuel for markets. But is there a catch? Or a counter-argument? Are any sources suggesting maybe that liquidity injection won't be as fast, or maybe it gets soaked up elsewhere first?
That is the multi-billion-dollar question, isn't it? Yeah. While the projection is $500 billion, the risk lies in the timing and also the Fed's perception of when reserves are actually ample. If Powell today uses really cautious language or maybe suggests other factors like, say, the government issuing a ton more debt might absorb some of that liquidity, well, then the market won't get that immediate boost it's hoping for.
Okay, so the wording matters.
A lot.
Hugely. But let's assume for a second the market's baseline expectation is right. This liquidity boost is expected to potentially weaken the U.S. dollar index, the DXY.
The dollar strength indicator. Yeah. Exactly. A weaker dollar may be pushing the DXY down from around 104, where it is now, maybe towards 101. That traditionally fuels risk on assets. Crypto loves a weaker dollar, generally. So the nuance, the specific words Powell uses at 2:30 Eastern about the timing of the QTN, that's going to be the crucial element, way more important than the rate cut itself.
Okay, so we know some kind of dip is highly likely because of the sell the news dynamic. But the real question is, how deep does that dip go and how fast do things bounce back? And that all hinges on Powell's forward guidance. Our sources map out 3 distinct scenarios. Let's start with the big one, the most likely, the base case.
Right, the base case. This carries, according to the sources, an 80 to 85% probability. This is really the consensus view.
Okay, 80, 85%. What does that look like?
Okay, definition. The 25 BPs cut is confirmed. No surprise there. Then Powell signals the QT end is coming soon. He uses language like incoming months, or maybe we're actively reviewing the timeline. Basically, he maintains a sort of neutral to dovish tone. He successfully balances acknowledging the weakening jobs market with still keeping an eye on inflation risks.
Wait a second, though. If the cut is 99% priced in, like you said, why would the market still potentially crash 5 to 10%? Even in this most likely base case, doesn't priced in mean no reaction?
That's where that sell the news dynamic really bites. And honestly, it's almost a feature, not a bug, of these massive, highly anticipated events. Because the news, the cut, and the dovish nod on QT is so widely expected, you have institutions, traders, everyone, they've already positioned heavily before the announcement, expecting a rally.
Okay. They bought the rumor.
Exactly. So the moment the expected news actually drops, boom, they hit the sell button to lock in profits. Our sources actually put a number on it. About a 75% chance of this specific sell the news dip playing out.
Okay, that makes sense. So what are the predicted dips in this base case?
So yeah, we expect those dips mainly in the first, say, 1 to 3 hours right after the announcement. It's profit-taking mixed with options expiry chaos. For Bitcoin, that translates to a potential 5 to 10% dip, landing it somewhere between, say, $109,000 and $110,000. Ethereum likely follows suit, also down maybe 5 to 10%, putting it around $3,900 to $4,000. Altcoins usually get hit a bit harder in these initial pullbacks, so Solana could dip 8 to 12%, maybe down to the $185 to $190 range, and Cardano potentially drops 10 to 15%, testing that $0.60 to $0.62 area.
Ouch. Okay, 10, 15% on Cardano. All right, let's pivot to the dream scenario then, the moonshot. What happens if Powell just opens the taps completely? This is the low probability but high impact dovish case, pegged at only 5 to 10% probability.
Yeah, low odds but huge implications. The dovish scenario means Powell announces an immediate halt to quantitative tightening. Right now, done. No hedging within coming months. It's effective immediately or maybe next week.
Wow.
And furthermore, he signals a really strong commitment to growth. Maybe even explicitly hints at needing, say, 2 or 3 additional rate cuts coming in 2026. The market instantly reads this as massive liquidity relief is here now.
And the immediate reaction.
It could be almost no dip at all, maybe just a tiny 2 to 5% wobble as some weak hands get shaken out, or it could skip the dip entirely and trigger an immediate aggressive risk-on rally. Institutions would basically scramble to buy before that liquidity surge fully hits the system. This is the scenario that could spark an immediate run at new all-time highs.
Okay, and then the flip side, the one everyone's quietly dreading.
Yeah.
The Hawkish case. Still a non-trivial 10 to 15% probability. What are the warning signs here? What does Powell say?
Right, the Hawkish case. Here, the 25 BP's cut still gets delivered. Remember, that part is almost certain. But Powell completely shifts the tone in the press conference. He starts flagging serious concerns about inflation picking back up, maybe specifically mentioning risks from ongoing tariff discussions. Crucially, he actively pushes back on ending QT soon. Maybe he delays it well into 2026 or sounds very noncommittal. And he might hint that future rate cuts are less likely than the market thinks. Basically, risk-off mode activated.
And the market reaction.
It would be a much deeper, more sustained risk-off sell-off. Bitcoin could see a significant 8 to 15% dip, pulling it down towards that $105,000 to $108,000 zone. And in this environment, altcoins like Solana and Cardano, they get absolutely hammered. We could see 12 to 20% dips as capital just flees risk and rushes back into the perceived safety of a strengthening US dollar.
Okay, so we've mapped out the immediate shock, those potential first-hour dips. But what about the recovery? What does this all mean for, say, the first couple of weeks of November? History can be a guide here, right? Our sources mentioned the last FOMC meeting in September.
Yeah, exactly. The September 2025 FOMC is a useful recent example. Back then, we saw that initial dip, Bitcoin dropped about 4%, Ethereum about 3.5%. But then, it was followed by a pretty robust rebound, 8 to 15%, within just 48 hours. So that pattern sets the expectation for the recovery timelines this time. The key question is always, how quickly can that underlying positive factor in this case, the anticipated $500 billion liquidity tailwind from ending QT, override the short-term noise of profit-taking and options?
Right. So walk us through the recovery under the base case, the most likely one.
Okay, base case recovery. We're looking at a window of probably between 48 hours and maybe 7 days for prices to get back on their feet and start pushing higher. This recovery is really fueled by that consensus expectation of the liquidity boost, plus continued steady inflows into institutional products like the Bitcoin ETFs. The November price targets based on this scenario are pretty ambitious. Bitcoin is forecast to potentially reach $120,000 to $122,000. Ethereum is seen pushing up towards $4,800 to $5,000.
And you mentioned Cardano potentially hitting $0.80 and 90 cents. That's a huge jump, like 20 to 30% upside in just a few weeks from where it was pre-announcement, even under the base case. What gives the sources that kind of conviction for the alt specifically?
It's really that combination of two things. First, the Fed taking its foot off the brake pedal with QT ending, that removes a major headwind. Second, it's the expectation of ongoing institutional adoption and product launches spreading beyond just Bitcoin. The sources seem to project a strong rotation of capital out of Bitcoin and into high-potential large-cap altcoins once this immediate FOMC volatility settles down. And yeah, Cardano specifically is forecast to target that $0.80 and 90 cents range in November, representing that 20-30% upside from the $1.67 pre-announcement price, provided we get that base case outcome.
Okay, now what about that high-flying dovish case recovery? If Powell really opens the floodgates?
That's the express lane recovery. We're talking potentially just 24 to 48 hours. It gets supercharged by an accelerated alt-season rotation. What that means is Bitcoin dominance, its share of the total crypto market cap, would likely drop below 60% quite rapidly as money floods into alts. In that scenario, Bitcoin could push towards $125,000, maybe even $130,000 in November. But the real leverage, the truly explosive move, could be in something like Ethereum. The target there becomes $5,200 to $5,500. I mean, that implies a potential gain of 26 to 34% in just the next 2 weeks. Pretty wild.
Yeah, that's significant. And if we get unlucky,
Yeah.
we suffer that hawkish surprise.
Then the recovery is much, much slower. Think 7 to 14 days just to stabilize, maybe longer to regain lost ground, and the upside potential for November gets seriously capped. Why? Because a strong US dollar acts like an anchor, and renewed inflation fears would kill risk appetite. Bitcoin's November target in this case, limited to maybe just $115,000 to $118,000. That's basically flat to only 3% upside from the pre-announcement price. Solana, similarly, might only reach $210 to $220, just a modest 5 to 10% upside. That whole $500 billion liquidity surge narrative, it gets delayed, maybe even canceled out for a while.
Okay, so a huge divergence depending on Powell's tone. Now, the sources mentioned a 70% chance of Bitcoin hitting a new all-time high above that $126,000 peak from October 6th sometime in November. That sounds aggressive, but it ties back to that 2019 QT end event you mentioned earlier. Can we just quickly ground that 2019 reference? What happened then?
Yeah, good point. The 2019 QT end is really important context. It was the last time the Fed made a similar major pivot, shifting away from tightening policy back towards easing, or at least neutrality. The source material references it because it serves as a clear historical precedent. It shows what can happen when the central bank starts adding liquidity back into the system after a period of draining it. And what happened in 2019? Well, the market didn't just pop and drop. It kicked off a sustained multi-month rally. The sources confirm that after that liquidity shift back in 2019, Bitcoin saw this sustained 65% rise over the next 6 months. That history, that precedent, is exactly why the outlook now is so bullish if we get the base or dovish outcome. And critically, if that key $111,000 support level for Bitcoin holds during all the initial noise today.
Right, that 111K level seems key. Okay, let's synthesize all this. Bringing it all together for Section 5. What's the core strategic takeaway for you, the listener, trying to navigate this potential roller coaster?
I think the critical insight here is really twofold. First, understand that the market is heavily leaning towards and expecting a generally dovish to neutral outcome from Powell. That's the base expectation. But second, and this is crucial, that very expectation almost guarantees we see some kind of short-term dip first, driven by that sell the news profit taking and maybe some chaos from options expiring today. So the strategy suggested across pretty much all M forces is quite unified. Don't go all in right before the announcement. Position relatively lightly. Instead, focus on being prepared, having dry powder ready to potentially buy those dips when they hit those crucial support levels we discussed. The thinking is you have to look through the likely short-term pain to capture the potential longer-term gain from the liquidity shift.
Okay, let's nail down those critical support levels again. These are the lines in the sand. If they break decisively, we start worrying more about that hawkish risk-off scenario taking over.
Absolutely, yeah. You definitely want to keep these levels front and center on your charts today and over the next few days. They're the dividing line between a healthy base case dip in recovery versus a more concerning hawkish breakdown. So for Bitcoin, the big one is $111,000. Ethereum really needs to hold $4,000. Solana, that key support is down at $185. And for Cardano, watch that $1.60 level very closely.
Got it. 111K, $4K, $185.60. And on the flip side, what are the key catalysts we're looking for that would confirm the bull case, the big upside potential playing out through November?
Okay, catalysts for upside. Number one, obviously, is getting that definitive confirmation of the QT halt from Powell. Clear language, clear timeline. Second, and this is a macro factor, would be avoiding any negative surprises on the tariff front. Ideally, seeing some kind of constructive resolution or de-escalation from those ongoing Trump-Xi talks, maybe by November 1st. That removes a major risk. And third, specifically for alts, any positive news flow around accelerated ETF filings or approvals for assets like Solana or Cardano could really add fuel to the fire.
Makes sense. And finally, the key risks. What could derail this whole bullish setup and push us immediately into that scary 10-15% probability hawkish territory?
Well, a truly hawkish Powell is risk number one, obviously. If he comes out sounding worried about inflation and pushes back hard on ending QT. Risk number two would be an unexpected escalation in tariffs. If suddenly things look like they're heading towards adding another 1 or 2% to inflation expectations, that could force the Fed to stay tighter for much longer than anticipated. And one more, specifically for altcoin performance, watch Bitcoin dominance. If BTC dominance starts rising aggressively, say back above 62%, that's usually a sign that institutional capital is getting defensive, hoarding Bitcoin, and delaying that anticipated rotation into altcoins. That would stall those November alt targets we discussed.
Okay, fantastic breakdown. We've really detailed the 3 potential paths the market could take in the wake of this FOMC announcement and Powell's crucial press conference. And the difference, as you've laid out, between that highly probable base scenario and the less likely but possible immediate dovish scenario. It's measured in hundreds of billions of dollars in liquidity and potentially a massive 20 to 40% swing in altcoin performance just through November.
Yeah, the stakes are incredibly high today. And if we just zoom out for a second, connect this to the bigger picture. The source material strongly indicates that historically, these moments, the end of a quantitative tightening cycle, like we saw so clearly back in 2019, have often preceded massive long-term rallies. Rallies fundamentally fueled by that returning systemic liquidity. So it raises a really important question for you, the listener, to consider today. If that short-term dip does materialize in the next few hours, as widely expected, are we potentially witnessing the last major institutional accumulation opportunity, that final chance to buy in before that projected $500 billion annual liquidity tailwind really kicks in and potentially lifts the whole market? It's definitely something worth mulling over as you watch the market react.